Hey everybody, let's go on. I want to talk a little bit about scalping setups, market structure, just trading in general. I just posted up some info about I'm going to dig in and build my own custom iGRID based fractals indicator. It's going to be quite an endeavor. Nothing that I'll get done in 2 or 3 days, but I already have the base code on a particular platform that I can utilize to construct what I want for NT8 and other platforms. But let me talk a little bit too about certain types of setups that you guys can pay attention to for those of you that are doing some quick scalping type operations. And just want to kind of get into a discussion to expand your thinking on how you can go in and attack the market each day. And this is like stuff over and above the core iGRID system stuff that's automated. This is just stuff to realize and kind of open up your mind to different ways of looking at the market. So let's go ahead and remove that. And let's get into some setups, some thoughts on things, and a little exercise that I'm setting you up for. So one thing you can do, and what I have here, I have multiple indicators on the chart. I have the iGRID scalper set up, the new cyclical or cycle MA, and I have an iGRID Evo. Now the iGRID Evo, the only thing that I'm using from the iGRID is the Heikin-Ashi number 1. And that's that aqua blue line. So I want to use the Heikin-Ashi number 1, and I want it smooth, and the T3 does a really good job for working this type of approach versus some of the other smoothing. It's a little bit more lagged naturally in the way the math is utilized for looking at price, so it works good for what I'm using it for right here. And then I have the iGRID scalper running with some pretty high settings, sitting at 9 for sensitivity, 105, like 101 to 111s is kind of a range that, seems to work for when I'm down in a pretty low time frame chart, but I just kind of want a bigger picture look at, the market's movements. So, you don't have to match up your chart exactly like mine. You can get it in the ballpark, you're fine. What my iGRID settings are for the scalper is not really as important as how I've set the iGRID Evo on the Heikin-Ashi 1 side, and I'll show you why. So these are the types of things that I pay attention to throughout the day when the market's trading. So let's go take a look at some patterns of price activity that I think can help you see areas that are really good to get involved with trade. So now you can see here was during the U.S. session. This is Central Time below Chicago Globex time. There was an area in here that had held, or I should say was support. And, if you want to be a buyer in the market, what are some ways that you can use to filter out when you could actually take a shot at a buy side trade versus a sell side trade? And I'll kind of show you that. And there's ways that you can set up the Heikin-Ashi so that's the only thing you see on your chart to help you wait, and then know when to get in. So right here, we see a market coming down during U.S. session hours. Actually, this was in the overnight session right here, the time. Let me move my drawing tool. Or I should say more like pre-market, not overnight session. But, we went through the overnight session. Some 7:30 news hit. We got some selling, initial reaction on the selling, then some lift, price oscillated. But then a good now we're many, many minutes past the news release. So am I going to dive in and, work a short side or a long side trade right in the middle of the 1 minute period from a news release till 1 minute's played by? No. But let's take a look at what played out afterwards. So now we're getting to 7:35, 7:40, probably about 7:40. 5-ish, 7:46-ish in the morning Central Time. Okay, now the news is played out. Now I can take a shot. So here we have a level of support that was created, and actually we had some support back prior in this area. We had a retest out of the initial news reaction. The market oscillated a bit and then broke lower. So basically we're getting a level sweep right before the U.S. cash session open, or leading up to the U.S. cash session open. So if you wanted to be a buyer in this market, like you really want to be a buyer in this market, and you see some other support, and it's an area price that you would want to be a buyer, then what I suggest is wait till that Heikin-Ashi flips directions for you. And I'll expand the chart so you can see that a bit better. So wait until the Heikin-Ashi flips. So some people like to see price above the Heikin-Ashi, and then they'll go. I think that's a little early. Get your settings on your Heikin-Ashi so they're responsive, but still lagged a bit, so that even though market's oscillating a bit, you can get in after you see your Heikin-Ashi flip from downside to upside. And it's pretty easy to see it visually. On uptrending Heikin-Ashi, the wicks are only on the top side. On downtrending, they're only on the lower side. So it's that transition in the Heikin-Ashi from downside plot to upside. That would be your go bar right in here. And risk, it's real simple. Just put it a little bit below the most recent price pivot. So, here you're not going for moves to the complete other side of the range, current range. You're going for to catch something out of that. So you take a stop to break even plus, and then see what plays out. And I know a lot of people, they're doing quick scalps. They just want to catch a little pop. As soon as you see the price start spending time below the Heikin-Ashi, that's your, make sure I've locked in something. And then if you see the Heikin-Ashi flip on you, might as well just get out of the trade or tighten stop. Okay, we get through the U.S. session open period. The market's junk, nothing there. I don't see anything. iGRID is kind of telling you, hey, stay to the short side a bit, and boom, we get another level sweep of a fresh level. You're thinking about buying, you got an up candle right there. Ooh, I want to buy it. I'm going to get in. And then it goes down and you get stopped out. Wait till the Heikin-Ashi flips, then get in, then put your stop. And at any point the market gets to your 1-to-1 point, you can move stop up to break even plus, and then just keep an eye on it. Because remember, once you got a protected trade, just leave it on. Let it see if it can run a bit. There's no rush that, you just barely hit 1-to-1. You got your stop to break even, from your entry point, break even plus. There's no need to micromanage the trade. See if it runs a bit. And if it runs a bit, it's all about in the beginning, whatever initial movement you get your stop to break even plus. You get some initial movement, get your stop to break even plus. Then see if it'll run a bit. So it's waiting for that Heikin-Ashi to hook after an event like a level sweep or levels test. Okay, going forward, other types of setups you can consider. Now, in this case, we're getting into the U.S. cash session hours, into the opening hours, or opening period, and the Heikin-Ashi is flipped to green. The iGRID is flipped to green. Now I can do quick scalping in alignment with benchmark and determine momentum. Then, if I'm all green and I'm in green bars, if the price lifts above the Heikin-Ashi, I can get in there. That would be the earliest, or wait for the flip in the Heikin-Ashi and do some quick scalping. Get bars above, stop just below, oscillates a bit. Heikin-Ashi actually flips in here, get a little move, and as soon as it runs away from you and you get stopped to break even plus, you can stay in that trade until you get the Heikin-Ashi to flip on you again, or you just have a trail stop, and when the trail stop gets hit, you're done. And sometimes just having a trail stop works better. You'll get blipped out early a few times, but then because you're a little bit more passive in the management of the trade, you'll catch a bigger one. Now, if it's in the beginning, you're just trading and you're just trying to build up, some capability, then it's better to grab some profits. So get in, price starts spending time below the Heikin-Ashi flips, get out. You get in, price is below it, flips, get out. You get in, Heikin-Ashi runs. Heikin-Ashi flips right in here, but the candles are uptrending at the time. So I would wait. Then we're below the Heikin-Ashi, then it flips. Okay, now I'll get out. Get in, get out. Get in. Oh, and now I got a runner. So this is, if you can hang by learning to be a bit precise in that type of period, when the market's more normal and oscillates, you'll do fantastic. Now here's a key market came up and did a kind of a critical level sweep, and you want to sell that area. You wait. Heikin-Ashi flips. Now you can get in, stop, see what happens. Now you get a lower pivot high after a level sweep. This to me is a little bit of a lower probability trade, just because the market's been pretty bullish. But in the end, if you wanted to take a shot again at the short side, you sold it, we got lift, you're looking to see if the market's going to start stair-stepping lower, you take another shot. The market, you wait for the Heikin-Ashi flip and trade to the downside, and another one, and so on. Now, these you have to be more cautious because you're still in the environment per these settings of the potential of upside price action. But then when we flip to short side price action, when the Heikin-Ashi flips, and here you got a bunch of entry option 1 magenta bars, that's a good area to take a shot to the short side. Stop here, see what plays out. Here's a lower pivot high, take a shot. Stop up here, see what plays out. And so on. So setting up the Heikin-Ashi, I actually know some traders, they've found time frames of charts. They needed their setup to be so brain dead simple that it was so cut and dry they didn't have to think. What they've done, and it was kind of from suggestion I showed them, I said, find a time frame where the pace of the candlestick formation and how the day plays out is not too fast, not too slow. Go play around with the Heikin-Ashi one smooth. Don't see anything else in your charts. Get rid of any bias. Just work hook points. And if you're on a little bit of a high enough time frame and you have the Heikin-Ashi smooth to a point, you're not going to have a lot of flip back and forth. In other words, you're going to be kind of catching the bigger structural moves on the day in a very, very methodical type of process. Now let's look at some other activity. There was some level that I was paying to from the other day. Yeah, it came back up, tested that level, rotated, and then we're into the later part of the day where I'm not all that interested in working. Now, I think this was Friday. I was watching. The market came up and hit some key levels. And I remember I threw on some liquidity, just manual trading right here on that flip. It lifted. I had my stop above, just slightly above the most recent pivot. I held in the trade and I added on this M pattern, and you can see price made an M pattern, rolled over, and that ended up being a nice trade. So sometimes